Welcome to my YouTube channel, Financial Literacy Class 101. Our topic of today is Money Market Fund. So this will be our focus for the day. If you want to reach me out for business consultation, here is my number. And also you'll get it in the comment section. So what is this Money Market Fund? Money Market Fund is a mutual fund that invests on low risk, short-term debt securities. So what do I mean? The fund manager, who is the investor, takes this cash and invests it in money, in treasury bill, treasury bond, capital fund, and infrastructure bonds. So so let us get to the details. I'm sure that some of you are wondering maybe some of the types of money market fund we have. We have Etika, we have Safaricom Mali, we have Zimela, we have ICEA Lions, we have CIC Investment Group. All these are the type of money markets that we have. So I'm sure you are wondering, what do I mean money market fund? Money market fund means the cash. Once the cash is in money market fund, the person who operates it is called a fund manager. This fund manager is regulated by Capital Market Authority, and they have to have a custodian. Custodian is a bank that stores the cash for him. So the cash is not with the fund manager. The cash is stored with the custodian, but the instructions on what to invest, when to invest, or how to transact is instructed by the fund manager. Then we have a guarantee, and a trustee. So the fund manager. I know you're wondering where the most legit question to ask: if money market fund is giving me an interest of 12% to 18%, where are they investing those cash? So we say that money market fund invest in low risk and short-term debt securities. So money market fund is investing the cash in the treasury bills, or the treasury bills, the bills, the bonds, the capital, and infrastructure funds, bonds. So I will focus on the type of accounts that we have. So there are people in diaspora. So if you're in diaspora, the money market funds offers you a chance to have a diaspora account. Maybe you're in diaspora and you need a dollar account. You can also focus on dollar account in case your income or your payout, or those people hired by embassies. Maybe you're hired by a certain embassy. You need they provide a dollar account. They also provide maybe for the families that are starting and they have a kid or a young one. It's called a junior account. They also offer individual accounts. They offer group accounts and chama. What do I mean chama? Chama, this is a group account. So as long as the chama is registered by social development officer, they'll be there to accommodate you. So money market is a mutual fund that invests. We said it invests on low risk. So what do we mean by low risk? Money market is not a money making scheme. Money market, this is where you store the cash that maybe you're not using. Instead of saving your money in the bank, where the bank you're getting 5 to 7% interest, head to money market fund, you'll be getting 12 to 18%. And that is why in this channel we offer financial advice with a motive that the community will get financial literacy. Once the community gets financial literacy, all of us will achieve our financial freedom after we are all financially successful. That is why if you find this video is the content is resourceful, leave a like for YouTube algorithm to recommend to other people. So we say that they invest on short debt securities. because like lastly, the last infrastructure bond that had been floated by the government, issued at a rate of 18% per annum. It needed somebody to invest their cash for 30 years. You see, now once you come talking about 30 years, it becomes difficult. So that is why money market offers you flexibility, flexibility, and themselves they invest on short debt securities. So Etika, so far, Etika Money Market Fund is the one that is offering the highest interest. It is offering an interest rate of 18% per annum. So we said if you have to invest in a money market fund, ensure it is regulated by Capital Market Authority. And so far in Kenya we have 29 so far companies that have been regulated and comply with Capital Market Authority regulations. So another things, first consider when joining these companies, you need to consider, does this company has an online platform? So they need to be having an app that is digital, so that you can maybe make your request digitally. In case you want to withdraw your funds, you can just click withdraw, you get your funds. In case you've deposited, you really do not need to start calling them and asking them, have you received this amount? You can just be able to review. So another factor that you need to consider is what is the minimum cash that I can put in money market fund. So they are requirements that a certain amount of fee you shall be deposited in the money market fund. So if it is a comrade, you'll have to see if your need suits you. For comrade, this is a student in campus who is listening to us and want to be financially literate, and this person will be very successful since they have started their journey of financial literacy at a very young age. If you find value of our content, ensure you leave a comment, like, then head to YouTube search browser, type as one word @financial literacy class 101. So another thing is how are the interest paid how are the interest paid? The interest are compound daily. So it means interest is compound daily, but it is credited monthly. So and it is calculated yearly. So it means if this time, like let's say for example Etika, which is so far the money market fund offering the highest interest, if Etika is offering at 18% per annum, it means that is per annum. So that 18% per annum will be divided so that you are given your interest per day. It compounds per day, but it is credited only at the end of the month, and that is it. So the interest is accumulates per day. So let me give an example of a clear situation. If today you decide to engage in an investment plan, and you engage in a 10 year saving mode, and every month you're saving 10,000. So 10,000 and 1 year has 12 months. 10 years have 120 months. So once you're saving 10,000, by the end of year 1 you will have 120,000. By the end of year 10 you will have given out, or you will have invested 1.2 million. But power of compound interest, the interest that you will have got through that as the interest is compounding daily, will be 2.3 million. So it means by just saving 10,000 per month, 10,000 per month, at the end of 10 years you'll be having 2.3 million. Then the government normally deduct the interest. Now the interest is the compounded interest. Total income has come to 2.3 million, and you had stake 1.2. So the interest is 1.1. The government will have to pay 15% as withholding tax. You are left with 0.1 85% of the interest, and 85% of the interest, once you're saving 10,000 per day, will be 945,000. 945,000, once you divide it along, since you had been saving every month, this money was not saved by one day, by 120 months, it means every time you go and save in a money market fund 10,000, you get an interest in that month. Once we calculate the compounded interest per month, you get 7,791 shillings. So what do I mean? If every day you save 10, if every month, not every day, every month you save 10,000, you're getting that month you're getting an interest of 7,791. So that is the power of compounding interest. I have a video that is following up. I will clearly define, give scenarios of a person saving 10,000 per month, another one saving 5, another one saving 20, and a comrade in campus who is motivated and who is in this journey of financial literacy, who is saving at least 1,000 per 1 month. So that information is home. So I know some of you are asking how is this money market fund safe? Yes, money market fund is safe because it has been regulated by Capital Market Authority, and any time maybe it collapses, you will need just to go with in the Central Bank of Kenya and prove that you've been making these payments. Once you make this one, the fund manager will be forced to recompensate you. Again, the fund manager is controlled. They cannot just invest on anything. They have to invest in low risk. So remember, we normally say invest in low risk, low returns, because if it was the same amount that is plugged into business, it will be having high risk, high income. Let me give an example. If it is asset financing of 7 million bus, 7 million bus normally bring 14,000 per day. So it means once you deduct maybe maintenance and the circle fee is 10,000. So per month the 7 million bus is bringing 300,000. But remember, if you put the same situation and put 7 million in money market fund, let us calculate at an interest of 12%. Once the money market fund has already deducted the fee, their management fee, and maybe other deductions, you are left with 12%. It means that is 1% per month. So every month you'll be getting 70,000. So now through that you are able to get why we say it is low risk, low returns. A business is high risk, high returns. 7 million in asset financing in a bus brings 300,000 in a month, but it is risky. If the bus makes an accident and you had not renewed your comprehensive insurance, you will be able to furnish. So another thing is money market fund favors long-term goals. So money market fund, this is not something you decide to invest 6 months, or you decide to pay. Maybe your kid is only 2 weeks before they open their school fees, then you put your cash in money market fund. It is not. It favors those people who are investing long term, in 5 years plan, 10 years plan, and your cash will have doubled. And that is the power. That's the time you'll enjoy power of compounded interest. So thank you for watching so far. If you find value in our content, ensure you leave a like. YouTube algorithm will appreciate the content and it will recommend it to another person in the community, so that all of us will be financially literate. This is financial literacy class 101. Thank you.